Hello, everyone. I'd like to welcome you all to the panel on corporate investing. My name's Ralph Taylor-Smith. I'm the Managing Director of ETS Capital. And today we have several of our portfolio companies joining me in this panel. I'm going to let everyone introduce themselves. I think I'll start off with Manu of Empower. Manu, please introduce yourself and say a little bit about your company as well as the business model.
Sure thing, Ralph. Really happy to be here. And hey, everyone. So I'm Manu, the CEO and co-founder of Empower Financing. And in a nutshell, Empower is the leader in international student financing in North America. It sounds fancy. In practice, what it means is we finance students coming from 180 countries around the planet, going to the top 350 universities in the US and Canada. And as there are thousands and thousands of students around the planet who cannot afford an education in North America or who have to turn to pardon my French, horrendous rates in their home country, we offer loans at better terms and enable students to get access to education, which is why we're really excited to be an ETS portfolio company. ETS invested $5 million in Empower earlier this year, and we're really excited to work with their GRE and their TOEFL divisions in order to reach more and more students together.
Thank you very much, Manu. I'll go to Marlo next.
Hi, Ralph. Marlo Johnson out of Edigree. Edigree is very much a new startup, came out of ETS where I was previously, and very proud to be part of the portfolio out of ETS Corp Strategy. Edigree is focused on student success, aspiring international students looking to provide longitudinal engagement for those students so that they can practice their English, in some cases leveraging capabilities out of ETS's excellent suite of research and products. We're looking to provide access and equity across the international student journey. So partnering with universities to find opportunities for them to gain visibility. But on the other hand, really looking to bring the students in so that they can have an opportunity to build up their provenance and proficiency indicators. Thanks a lot.
Thank you, Marlo. Yegven, I'll go to you next.
Thank you, Ralph. I'm Yevgen Borodin, the CEO of CAPTI, also known as Charm Tech Labs, and we're empowering teachers and students to raise literacy. There are about 2/3 of students reading below grade level nationwide, which is a huge problem and really a barrier for career advancement for a substantial portion of the population, especially those who are socially disadvantaged. And this has now been compounded by significant learning loss over the past year. So my team at CAPTI is dedicated to solving this massive challenge. And we created CAPTI, an all-in-one reading solution that helps teachers assess, accommodate, and advance reading for students of all abilities. We sell annual SaaS licenses to organizations, primarily to schools and colleges. And prior to our partnership with ETS, we were a niche assistive technology product focusing on reading accommodations. And now, thanks to our partnership, we're able to expand to reading assessments and now reading interventions to provide complete all-in-one solution. Specifically, we're licensed and brought to market the ETS Read Basics diagnostic assessment that helps teachers better understand their students' reading abilities and focus the instruction and intervention. And now we're finishing up an intervention component aligned with Read Basics. We're always innovating and improving our product line. Our primary focus right now is scaling our marketing and sales.
Thank you very much, Yegven. Now I'll go to Martin.
Hi, everyone. Classic, huh? Hi, everyone. Thank you very much for having me. I'm Martin Basiri, CEO and co-founder of ApplyBoard. ApplyBoard is a universal application system. It's a platform for students around the world who would like to study in US, Canada, United Kingdom, and Australia. So with single application, they can apply to multiple countries, to universities and colleges around, like different universities and colleges in these places. 1,500 institutions, higher education, and also like some secondary schools as well. And we so far helped around 200,000 students since inception 6 years ago when we started the company with their application journey.
Thank you. So ETS Capital has been in business for about 18 months. And So all of you, we actually closed an investment transaction within the last 12 to 14 months. And clearly that's during that time frame that COVID-19 emerged. So I'd like to hear briefly from each of you how COVID-19 has impacted your business, both positively as well as potentially negatively. Manu, again, I think I'll start with you.
Thanks, Ralph. So COVID has obviously created a lot of turmoil last year for international students, especially, and that was amplified by fast changing immigration laws. So one day students thought they could stay on campus, the next day they were told to go home. It was difficult to travel internationally. Now, there's other forces that we saw that were interesting and more favorable to our business last year. One is as people moved digitally, meaning they used digital online shopping, they used digital payments. There's actually stores that from one day to the other said they would no longer accept cash. It was digital payments or electronic payments only. Well, the same was true for digital lending. And so instead of going in India, in China, in Brazil to a brick and mortar bank with your parents and taking a health risk, effectively going and shaking the local bank manager's hand, students turn to their smartphone to apply for a loan with Empower. So that's certainly one trend we saw. The other one is during a time of financial stress, more people turn to lending so they wouldn't add financial burdens on their families, especially if mom and dad's small business wasn't doing as well, for instance. And so we saw a huge surge in demand for loans under that as well. The other and last one, and then I promise I'll shut up. The last trend we saw is there's a flight to quality and safety in a global pandemic. And we saw more and more students or parents wanting their children to study in North America or in places that had access to the vaccine, where the economy was reopening and where the people were safe from harm. And so more than ever, we saw a surge in international students.
And maybe I'll ask Martin to comment as well. Did you see similar impacts on your business?
Yeah, what happened last year was very interesting. And I feel I'm so lucky that I was able to experience it from the business portion. I think I got like 2 MBAs during the last 12 months on business, just learning how to handle it. So the first effect was our main business was Canada. And after, actually, we launched all other countries post-pandemic. So Canada, the total number of students visas came down 77%. So overnight, almost everything went down. And what we had to do was like, are we going down with the system, or we stay where we are, or we just like decide to grow and get the market share? Because what happened, all of our universities and colleges, they were like, we'll figure it out. We can somehow teach online. We'll figure it out, but we need to now recruit. And the traditional way was get on a plane, go to different countries, go to a student fairs and trying to like recruit them. Now, all this, they started calling ApplyBoard. We started seeing a 300% quarter by quarter surge in our partnership. So all of a sudden, we are the only online player. So we are like a Zoom for our industry that everyone went to recruit. So that's why we've seen a tremendous amount of growth since then. And we made the team from around like 350 to like 400 people to over 1,000 people over the 12 months of the pandemic, even though the market is not back up. From the student side, what we have seen, exactly what also Manu mentioned, the changes of the rules, immigration, visa rules, even the university entrance exam. Today they wanted IELTS, tomorrow they were like, okay, we also accept TOEFL. The day after tomorrow, they were like, oh, you know what? Duolingo is also good. We had to do a lot of changes very fast on our technology and the front scene, and also educating people. Like even the universities and colleges, they were like, oh yeah, we accept Duolingo or we accept TOEFL, but their website was not showing that. So we need to be even faster than they themselves on updating everything. And we created this like a awesome news center to just keep pushing new newses, like a news to these people and tell them what's the update. Oh, this rule is no longer impact. Like, hey, this is a new rule and everything else. It was a phenomenal year for us, both from the company growth, but also from the personal development.
I'm going to ask Yegven next to comment, because clearly some of our panelists are more focused on the higher education sort of colleges and university market, while Yegven is obviously focused more on a different market, a K-12 market. So Yegven, please comment a little bit on how COVID has impacted your business.
Yes, we actually had to scale down our expectations for growth during the past year. Educators were too overwhelmed, and their biggest issue was getting students into Zoom, and they did not want to try or even talk about new products. On the flip side, we had a whole year to focus on product development, and with an investment from ETS, this effort is now paying off. Now the schools are returning back to normal and starting to look for solutions that address learning loss. We have renewals rolling in, new sales inquiries. Everyone is looking for learning loss solutions. So this is promising to be an unusually active summer for us. I think we're in the right place at the right time and with the right partner. And we're very optimistic looking into the future.
Thank you very much, Yegven. And Marlo?
Yeah, so the impact has been quite decisive, and I actually think I like that you phrased the question as both positive and negative. I think on the balance in the long run, the impact is going to be positive on Medegree. And that is really because, I mean, when we started up, I think we would have run the risk of being highly transactional in our relationship with aspiring students. This gave us an opportunity, albeit one that we wouldn't have welcomed intuitively. It gave us an opportunity to think about our product development, our platform development, what kinds of services and capabilities students really and organically needed. And as a result, as we're now beginning to exit from the pandemic, we're actually seeing now students coming earlier in their education journey into the platform. So rather than just bringing in students who have that moment of deciding to go into higher education, we're now looking at 10th graders who are thinking about that journey and building up their skill set. I think that's going to be long run a big change in the industry, that students over time are going to start to build up their provenance, build up an understanding of themselves about where they might best go to optimize their success. So I'm very excited about where that went. It also presented very real challenges. Universities often were initially difficult to speak to, not because they didn't have problems, but because they had too many problems. So they weren't in an experimental mode, they were in a crisis mode. We're coming out of that as well. So.
Yeah, to have changes in the industry, what we also noticed is that prior to the pandemic, when we come into a school, especially in rural areas that have poor internet connection, that have so many technological reasons they could not use our product. And now, over the past year, everybody is geared up. Everybody has fast internet connection, one-to-one Chromebooks. So yeah, I think looking to the future, this is now going to be a much faster market.
Yeah, and I think you're all bringing up some key points here. I mean, it's clear that COVID has really accelerated certain trends in education, in particular, the trend towards virtual education, online, quicker adoption of technology. And I think those are really key important points. I mean, let me ask a broader question. And this time I'll start with Martin. As you look ahead over the next 5 years or so, what do you see as sort of broader macro trends that are going to impact your sector? I mean, clearly COVID is one of them, because I don't think any of us feels that COVID is going to go away completely. Although yes, there's a vaccine now. I think if you watch the news, you listen to CDC and NIH, they think that COVID is still going to be around some way, shape or form going into the future. But what other sort of more broader macro trends do you think could impact your business?
Yeah, in terms of like one of the best things that we started seeing in terms of study abroad and international education, I believe like we're gonna see first a post-COVID surge happening, that all the pent-up demand gonna hit the market. I believe more than ever, people value traveling and the little stuff that we were taking for granted. And having, I believe one of the things that we start seeing very much in the next decade in higher education is experiential education, like all the experiences you get while a student, because a lot of people realize that you can get the content from even as free as YouTube or platforms like that do like a MOOC education or like online platform of universities themselves. But the experience piece is something that a lot of focus is going to go. In terms of the macro, one thing that I started seeing a lot, the financial access to education is going very much. Like I at least like know 5 companies in India that they're working on it. All like Manu's company doing it. This is amazing because if you look at higher education, we are talking about 500 million people don't have access to higher education. And if we say even 50% of them would like to go to university or college, same ratio that we have in United States, we're talking about 250 million people. That's almost like 8 times the population of Canada that they need to go to university and they can't. And number one reason is financial access. So I think that's one of the things that I see it's solving, and I'm very, very optimistic about it. This is what we want to do. We want by end of 2030, so by end of this decade, right? A plus 1 year, by end of 2030, globally, whoever is a good student have full access to their education in terms of financial education access, regardless of their religion, nationality, their parents' wealth. So even if you are the poorest of the poor, the area that I grew up in Iran, like where people don't even have second shoes, you still can afford to go and get loan or ISA or anything for the education. And I'm so excited about that future.
Yeah, I'm going to ask Manu to follow up on a couple of points that Martin brought up, in particular around sort of increased access to education and the sort of the financial implications of that globally, as well as this increased potential move to experiential education. I think, Manu, your business model right now more focuses on purely academic and not experiential. But give us some perspective of how you see the future emerging.
Sure. So I agree with everything Martin said. I think as a sort of the macro level, what we're seeing and what we anticipate seeing over the next decade is more than doubling the number of international students in North America. And that's really driven by the fact that the middle class, upper middle class, mass affluent classes in emerging markets, so India, China, Brazil, Mexico, want the best education they can get for themselves or their children. And again, there's this flight to quality, this flight to safety. And so we expect that will only get reinforced just based on the demographic pyramids in those countries. And so more and more students will come to the US, to Canada, to Australia, to the UK to study. To your other point around experiential versus on purely online, so Empower finances both today, both online and physically in North American campuses. But I guess if there's a silver lining to COVID is it's democratized online learning a lot more. And so what we anticipate seeing over the next decade is more and more students effectively doing their first 2 years or first year of on-campus education for an American university, but in their home country. So think ASU Bangalore or NYU Shanghai for a year or two. What that does is it allows them to get access to that US content and the US experience with lower costs because they're doing it from their home countries. So it's sort of a transition period before they then come over to the US or Canada for the rest of their education. As a big motivator for a lot of these international students is the jobs and the outcomes that they get after their degree. And then I have an unfortunate other trend that I predict for the students, which is a continued rise in tuition prices. We've seen this sadly in the US. What we don't talk about as much in the media is we see this accelerating in Canada. 76% growth over the past decade in tuition costs in Canada for international students. We see that continuing to accelerate as Canada, Australia, so countries where tuition was historically a bit lower, sort of bridging the gap with the US. So sad news for students. Good news is Empower is there to help you finance your tuition or housing or meals or health insurance.
I like that, Manu. It's bad news, but then you can, on the flip side, is good news as well. You have to break eggs to make the omelet. Marlo, let me go to you, because clearly some of the trends that have been articulated by both Martin and Manu clearly impact your business as well. I would love to hear your perspective.
Yeah, well, I mean, first off, I would say what Martin was saying makes my heart sing. The goal of, by the end of the decade, making sure that students who are qualified can study. That's where we should be headed. And I think that's a wonderful aspiration. And I think that through collaboration and partnership, we have opportunities to get there. I cut my teaching teeth in tropical Africa and met a lot of students in Tanzania and Cameroon who were so deserving for opportunities in higher education, but could never really dream about it. So I think one of the real strengths that we're going to see emerging from platforms in particular is an opportunity to partner across the ecosystem, looking for opportunities to find funding for students, and being able to identify students who have that need. Also, however, sharing with students that they do have that need. Right now, there are many students who come through the process, apply to 6 schools, get accepted to some, only to discover they can't really pay for it too late. And then they have to twiddle their thumbs, look for other opportunities. I think with a really robust sharing of information, that we're going to be able to get to a much better outcome for many of those students. So to that kind of gap question that you had, though, Ralph, around like where we are in trends, we still, I think, have a kind of gap in the standards around how students are described and how those standards are integrated across the platform. So as you look across at projects like the Comprehensive Learner Record out of IMS, I think there are opportunities to begin to standardize how we begin to describe experiential learning so that universities, higher ed, employers can begin to trust that information more and more. So I think that's the real strength in the kind of partnership across the ecosystem that we can have with these.
Thank you very much, Marlo. That was very helpful. I think I'm going to give Yegvan the last word on this question around broader trends impacting the industry. And in particular, I'm going to ask Yegvan to talk about his particular sector, which is clearly obviously more domestic US and more K-12. Some of his colleagues on the panel talked more about the global perspective and higher ed. I'd love to hear Yegvan's perspective, particularly in terms of K-12 as well as domestic US.
Sure, Ralph. I heard Marlo mention funding for students, so that's one of the trends. There's funding for schools. The lack of funding has been a barrier for schools purchasing and trying new products. Well, over the past year, schools received a massive amount of funding through the CARES, ESSER, and GEAR funds, which need to be expanded over the next 4 years. So that clearly is going to affect the trend that we'll see over the next 5 years. The other trends we see is integration and completeness on the product side. The use of LMSs has increased dramatically over the past year, and I expect this trend will continue. And as more and more K-12 and higher ed buyers are now expecting that the new products they buy be integrated with the school's tech stack. That's why we made sure that CAPTI is integrated with Google Classroom, Schoology, Canvas. These are the top LMS that are spreading across the US institutions. And as a related trend, educators now increasingly prefer complete solutions over juggling multiple disparate tools. And that's why we're striving to build all-in-one reading solution, solving a host of customer problems around reading, except for just one. For the same reason, we've seen a number of roll-ups and consolidations in the market, with larger companies buying out smaller ones to complement them and make their products more complete. And we expect that this trend will only accelerate.
Thank you very much, Yegvan. That was very helpful. I'm going to ask a sort of an interesting question now, and maybe from a slightly different perspective. I mean, all of you have raised money, some from corporate investors such as ourselves, as well as purely financial investors. Could you talk about perhaps some of the challenges that you see working with corporate investors, as well as the positives, the value adds? Because clearly we feel we bring certain value adds to the table, but I know sometimes there are challenges, in particular, perhaps maybe corporate investors are a little slower, perhaps than others. But just talk a little bit about the differences and sort of between corporate investors and regular financial investors, as well as hopefully the value add that you see coming from corporate investors such as ourselves. I think I'll start with Marlo on that.
So, I mean, my outreach and experience has been somewhat limited in this area, Ralph. So currently, Edegree is working solely with ETS. However, we are reaching out and beginning to have conversations. I certainly agree with the point about pace. One of the disadvantages in having these conversations is that they can be lengthy, whereas in a startup environment, which is what Edegree most certainly is, the pace of change and pivoting is very rapid. There's not often an appetite for that kind of volatility in a corporate environment. I think on the other hand, corporate level conversations drive a need to express strategy and long-term thinking. That's essential at the beginning phases of a startup. Well, and it's essential for any company, but especially I think startups can have a tendency to wear glasses that create nearsightedness. So, I mean, I've been very appreciative in my conversations with your team, Ralph, in particular, that have driven me and my team to be able to express where we're headed and why, and what success really means.
Sure. Manu, let me go to you next on that question.
Sure. So I think I echo the point around speed, which is normal. I think larger corporate groups are more deliberate. They think, to Marlo's point, in terms of decades or tens of decades, not in a year. And so that impacts the pace, sometimes a little bit the expertise also on the legal side. The startup world has its own sort of set of idiosyncrasies when it comes to deals and so on. But then the flip side is great, right? I think a corporate partner like ETS brings a certain degree of credibility, sophistication, expertise, data. In our case, the partnership we forged on the GRE side and we're working on the TOEFL side is a huge tool to build awareness for students. So it's about access, it's about growth of Empower while providing value to ETS, and ETS providing further value to its students. So I think that obviously is unique to a corporate partner. You don't get that when you get an investment from a VC typically or a PE firm. So that is enormous. And then again, echoing Marlo's point, the time horizon is different. So we hope this partnership, continues to grow and grow, not just in the next year or two, but in the decade after that. Again, due to the scale of ETS, right? I think we're talking 50. If I got my numbers correctly, we're talking 50 million tests roughly a year, 9,000 testing centers. I mean that's quite a scale compared to even an emerging growth company like Empower. So a lot of room for opportunity.
Thank you very much, Manu. Yegvan, I'd be interested in your perspectives as well.
Yes, most of our investors were, private investors or angels. So definitely it's much faster to get a check from them than from a corporate investor. And on the corporate side, we've talked to a number of investors, but obviously with ETS, we've seen success. It was a slower process, but I think there's a lot of benefits in working with a corporate investor. For example, in our case, we were able to build a relationship across different across the ETS organization with different departments. If you're taking money from an investor, sure, they'll help you if they have the time, but their time is spread thin and they have only this much expertise. Whereas, the ETS, We got research support, working with researchers to bring new product to the market. We get marketing support. ETS has lots of expertise in state and country level sales. It's never fast, but this opens up huge opportunities for growth. And for small companies like ours, just having the backing of ETS brand adds a lot of credibility. We notice that even when we tell our customers that we have integrated and distributing ETS product, we get very different attitude. The association with ETS naturally helps in conversations with investors now, and even when hiring new employees. A startup has this backing of ETS, has much more opportunities and better chances of success, rapid growth, more exit opportunities. And at the same time, you don't get the same pressures from investors to exit. So I think there's a lot more benefits working with a corporate investor, but obviously has to be an alignment. It's much harder to get an investment because regular VCs, they have focus, but they have a much broader view. With corporate investors, has to be aligned with the mission of the corporate partner.
Yeah, no, I think that was said very well, Yegvan. And clearly, I think each of you has experienced a number of different partnership opportunities. And I think the company is gaining a lot, ETS, but hopefully you are gaining a lot as well. Our goal is to be very synergistic. Let me see what Martin has to add on this key topic as well.
Yeah, I echo a lot of things, except ETS moved pretty fast for us. Like, we didn't feel they were slow. Like, it was actually a bigger check. It was along the side of VCs. So it was you invested at the same time that I believe Fidelity invested in us and Index Ventures. So it was the same timing. In fact, actually, maybe your due diligence, because you were familiar with the industry, was kind of a little faster even, at least from the industry point of view. So we didn't feel that speed, but right away after the closing, we started working with your team. Right now, we already launched something. I'm not sure if any of your other investments didn't. So Apply Board have a product called Apply Proof, and Apply Proof and ETS already launched and is getting used globally. So the first project done, the second project, like we signed a contract recently. We are so excited. Most likely going to launch it in early August. My experience was pretty good. I worked with a lot of big organizations. ETS, generally speaking, seems like every single of the silos have their, so one good thing about it, one bad thing about it. The good thing about it and bad thing about it is exactly the same. So the companies run with different divisions. The best thing about it, every division seems like they have their own autonomy, so they can make their own decision, and that's excellent. So that create actually a good speed compared to be as big of an organization. The bad thing about it, when you go from one division to another division, you may have to do some of the reselling yourself again and showing the value. But what we figured out with the work of like the business development team, which is like gluing all the divisions together, that process was pretty good. So generally speaking, I'm very positive about it, and I never regret like taking money from ETS, and I'm very, very proud of our partnership.
I'd like to thank you all for that very ringing, strong endorsement. And hopefully other companies that are out there hear what these portfolio companies are saying, because we have $500 million that we're looking to invest, and we're looking for good companies. So thank you very much, everyone. I think one of the last questions I'm going to focus on has to do with technological innovation. All of you represent companies that are edtech companies that are clearly focused on the education industry in different ways, but really built around technology and technological solutions. So my question is, what do you see that is missing in the industry from a technology perspective? I mean, what's the gap that still needs to be filled for not only your companies, but other companies as well to really start to grow and execute in a very rapid manner. Certainly one of the areas I hear a little bit about is AI. There's lots of focus on AI and how AI can impact education. Some of that is still hype. Some of that is now being realized. So certainly that's one area, but there might be others. I'd love to hear your perspectives on that. I'm going to start off with Yegven and get his perspectives on how he sees the industry as well as sort of any technological gaps.
Thanks, Ralph. I think that remote use case was perhaps the biggest demand over the past year, but I believe that that's not the innovation that everybody's looking for, at least in K through 12, especially now that most companies adapted pretty quickly. I believe that personalization has been and is the key to effective education, and educators need personalization that adapts to the students' abilities and complements rather than replaces teachers. We need to make teachers more effective at their jobs. And you mentioned AI. That is certainly the only way that personalization can work. AI is a hype term. Most often people mean machine learning when they say AI, something that takes a large set of data, processes it, and makes sense of it. So we think that personalization is the way to go. And the demand is there, but the supply is not so much.
That's helpful, Yegven. I'm going to go to Marlo next and ask him that same question.
Yeah, so I think the way I completely agree with what Yevgen just said. And I think the road to personalization is standardization. So I think a big gap that we have across the ecosystem now, and it's definitely one that's reversing, is integration of platforms and the ability to use a standard to gather meaningful student data to which we can apply AI, build algorithms that could be predictive of success in a meaningful way, that could be used by potential employers, could be used by admissions teams to understand the students and the learners. And I think that data, unlike in the past where we might have gathered moments from a monolithic standardized assessment, we're now moving to learning and experience longitudinal over a period of time. And those indicators are going to begin to serve for the personalization of students in the context of their continued journey, but it's also going to serve to increase things like yield for universities, because now students are going to be making informed choices and universities are going to be selecting students who will be able to succeed in that context. But that's going to require integration that we haven't yet achieved.
So I'm going to give Manu the last word, which means I'm going to go to Martin next and ask Martin what he thinks broadly about this key question of a technological gap. So Martin?
So it's very interesting because universities and colleges, at least in the higher education, they are the people that teaching everyone about technology. And they're also from the same side in certain areas, one of the slowest industry to adopt the technology themselves. And that's kind of very like a strange, like you see in the computer science department, they're teaching people the like very high algorithm. And then same, like all those material are on a very broken, unsecure, for example, LMS that they're teaching. So like, doesn't make sense. Like you expect the teacher to have the best. And I think one of the main reasons for it is universities kind of look at each other. And for you to have like a massive success, you need to have a lot of universities come to your platform or adopt that technology. So the other one using it. So it's unlike the businesses that businesses kind of decide on their own. We could see in higher education that it is sense of everything. So a lot of companies give up earlier on because they go to the first university, they ask for customization, and go to the second university, then they give up. However, if you want a mass adoption, something in the US, you need to have like 500 university minimum start using it. And universities have different departments and stuff. What I would like to put out there is not just like mentioning it, is to give one key, is for any new entrepreneur or anyone watching this and they're inspired to create a digital platform or digital solution for universities or colleges, I would invite them to think from day one, how could they create a massive network effect? How could they create a network effect that from day one they can bring and adopt a lot of schools on top of it? Otherwise, it's really going to be a little harder for them to scale it to a bigger thing.
Good points. Manu, I'm going to give the last word on this to you.
Hard to follow all these points, but very, very good points, obviously. So, what I see as a potential gap is I look at the industry, I look at education and almost what I would call the ABCs of education. And by that, I mean access is the A. So access to education is something we're all working on this call. So we're leveraging technology to provide access to various students or fringes of students across the planet. The B in the ABCs is for breadth of services. And we see a lot of tech companies or ed tech companies work in that. So this is the boot camps, this is continuous learning, this is going back to school for advanced education, online, offline, hybrids, and so on. The C's to me is where the gap is. The C is for capability. And we see that in other industries. So I come from financial services and financial inclusion, really, where you have a lot of software that allows people, and this is true for Credit Karma or companies like Truebill, that allows people to make better financial decisions. We don't have as much of that in education. That's why we still have an issue with undermatching of students, and the undermatching is a true issue domestically. It's also an issue for international students. And so I think that in the future, or I hope that in the future, we'll see more and more companies help solve undermatching for students, both domestically and internationally, by leveraging the data that Marlo talked about, by leveraging sort of the flows and the partnerships that Martin focused on as well, or leveraging some of the data that Empower is sitting on and the access that we provide upstream. So that's it.
That's great. Thank you very much. And I think I'd like to thank all of you. So Manu, Martin, Marlo, and Yegven, I'd like to thank you all for participating in the panel today. And I'd also like to thank you all for joining ETS as part of ETS Capital. You've all been great portfolio companies to work with thus far, and I'm looking forward to tremendous success from each of you. So thank you again, and I trust that the ASU+GSV audience will gain a lot from listening into this discussion. Thank you again. Bye-bye.